Hello traders, my name is Tomasz Wisniewski and I'm CEO at Auxiliary Intelligence. Welcome on our webinar. Please confirm on the chat that you can hear me, that you can see me, that everything is okay with audio and video, and you can see the slides. You can see the first slide of the presentation. So I guess you do, so excellent. Hello again, it is a pleasure to be here with you. And today's topic is trader psychology and money management. I did hundreds of webinars and seminars across the globe, and I know for the fact that this is the topic that you like the least. You don't like to study trader psychology and money management. I mean, not you, because obviously you won't, because you are here, but most of the traders, they avoid this. They prefer to learn about system strategies, indicators, various types of analysis, etc. And they tend not to be interested in trader psychology or money management, which in my opinion, and I always say this, is the biggest mistake, because in my opinion, this is the key for success. And in those few slides, I will explain you why this is a key to a success. So I will clearly show you that money management and trading psychology is absolutely essential in order to be successful on the market. So let's start a small introduction for those who are with Auxiliary webinars for the first time. So I'm trading myself professionally for the last 10 years on real accounts, on real markets, on stock exchange, on the forex market as well. I do seminars, webinars. I'm sharing my views, my trades. I'm sharing my trading accounts with the clients. So it's not that I'm just teaching, but I'm teaching by showing my real results and what I do in real life on the market, right? So I think this is very beneficial for the traders, because they can see real trading in action. So let's start with the psychology and money management. Just by the way, on indices, I look on the chart now, and there's a nice reversal on indices. On Nasdaq in particular, we are testing crucial horizontal support. The price created hammer candlestick on H4, which looks pretty promising. But let's move on. As you can see, it's everything is about trading, practical trading. Even during the webinar, I have something. I have an interesting setup for you, an interesting market movement. Anyways, we'll talk about psychology and money management today. And first, let's talk about the performance on a demo account. Who is trading on a demo account of you, or you're maybe trading on a real account? How it looks like? Are you trading on a real or demo account? You can type on the chat if you're a real or a demo trader. All right, demo. Thanks very much, guys. I'm gonna tell you something which is a common knowledge. This is a common knowledge that results on demo and real account, they differ. You get different results in trading in demo account and real account. It's usually easy on demo account. You, as you say, you can double your account on the demo account. On real market, on real account, it's more challenging. But why is it happening? And it is for the fact. But why is it happening? Why we have such a situation? If the quotes are the same, right? Euro-dollar on demo account is the same as Euro-dollar on a real account. The factors affecting the price of the asset are the same too. You have the same platform, you're using the same orders, you apparently using the same system. So why the results are different? Well, the results are different because of the power of our mind. Okay, so results are different because you are trading on real money and this affects your trading decisions. You may think that your actions are the same, but in fact that they are different. So it is because of the fact that you are investing real money. This affects your trading decisions, and your mind forces you to trade differently. You start to feel scared, excited, or other emotions associated to trading. And you don't feel those emotions when you are trading on demo account for play money, right? You don't have those emotions because you cannot have those emotions. You will not have the same emotions when you are trading for your monthly salary as you trade for play money. Okay, it's absolutely impossible. And when you start trading on real money, these are the most common mistakes that traders are making. And guys, I really have to tell this because I met a lot of traders, thousands of traders, I would say, from 4 different continents. And really, those mistakes are the same. It doesn't matter your religion, where you were born, etc., etc. Those mistakes that traders make are the same. And here I just point 4 main mistakes, but I would say that this is like 80% of all the mistakes that traders make. So this is absolutely not a rocket science. Traders all over the world, they make the same mistakes over and over again. So first of all, for example, they trade without a proper trading signal. So they trade just for fun, just to feel this thrill, etc. They use too big position. They don't have a B plan, which is like escape plan, what to do if you are on loss. Because of course they have a plan what they will do with profit, but they don't plan to have a loss. So they don't have a plan what to do in case this loss will happen. And they are overconfident, especially after success on the demo account. They enter the real account, they think it's super easy. It is easy, but it's not simple. Okay, that's the difference. And that just to name few, but again, it's like 80% of all the mistakes. So how should you approach trading? Well, first things first, guys, we need to go to the basics. So first, let's talk about your targets. So your first target should be not winning millions or owning a Lamborghini after 1 week of trading, but staying above the water. And by above the water, I mean to have the same amount of money that you have when you started investing. So for example, you started trading with $10,000 and you keep after 3 months $10,000. Okay. Later, you should focus on strategy optimization. So you go, you drop the drawdown to the lowest levels possible, and try to get good risk to reward ratios. DD drawdown, so it's the amount of money that you go down, okay, on losses. So it has to be low, not your equity line, but the amount of money that you lose. Okay, it has to be low. And good risk to reward ratios means that you need to focus on trades that when you're right, they bring you a lot of profit. And when you're wrong, they bring you a small loss. This is risk to reward ratios. Do not focus on winnings, but focus on not losing. And don't get me wrong, you should not avoid losses at all costs. Panically avoiding losses will make you no good, okay? It is just that you should control your losses. Don't try to avoid losses at all costs, because it will not happen, because everybody's making mistakes now and then. Okay, so you will make mistakes, of course, and it's absolutely normal. But those mistakes cannot cost you a lot of money. Okay, so what professional traders do, they focus on cutting losses, and they are looking for highly probable setups. As you can see, probable, you remember it from our previous webinar, it's all about probability, not possibility on the market. And beginners, they focus on profits, and they open whatever trade they see because they just want to have profit. Okay, 1000% profits are obviously possible, but they are not probable. Okay, you always should go for probability. And let's make it clear, guys, if you earn 2% per month, you're still a winner and you make an awesome return on a yearly basis. Okay, most of you would think like 2%, come on, what's that? That's nothing. But it's an awesome return, and 2% per month, it's a great return over 1 year. Guys, your mind is the most important thing in trading, not strategies. Because even if you have a great strategy, if your mind is not ready, your mind will not be able to control the strategy. Your mind will not be able to apply the strategy. Okay. Professional traders, what they do is they focus on removing the risk from their investments. On the other hand, the beginners, they seek for risk. They are looking for risk. They want to feel it. They want to embrace the risk. But what's happening is that risk presence, it disturbs the decisions-making process. So if there is a risk on the table, it affects your decision-making process. And you would like to remove the risk completely. Of course, there's always a risk, but if you cannot remove it completely, you should minimize the risk as much as possible. Okay, and the key here is the percent of your capital which you risk per one trade. And here we are moving a little bit to the money management. Because money management and trading psychology is highly connected, is highly correlated. That's why we have those two topics on one webinar. So if the percentage of your capital risk per one trade is too big, so when you lose, you try again to make up for it. You try to convince yourself that you can do it. You try to make millions in one trade. Okay, it makes absolutely no sense. Investing is eating with a small spoon. Demo trading is awesome. To learn your basic strategy, to find out about what the broker has to offer, to learn the market. But you will never know if you're immune to risk if you trade on a demo account, because there is no risk on a demo account. What will you risk? 1,000 play money? Demo is good for developing strategy, but as long as your mind is the key, you just waste your time. I'm not saying that demo is a waste of time, but playing on demo above 3 months is a waste of time. Okay. Many traders, when they are moving from demo account to real account, they cannot repeat great results from demo. Why? It's because of the emotions. And controlling emotions is what you should focus on when you trade. Even the best trading system will lose money if you won't use it properly, if your mind will interfere with signals that this strategy gives you. Because yes, it can happen. You'll get a clear buy signal, sell signal, etc. But your mind will be not capable of executing those trades, and you will fail. Simple as this. Few words about the ego, which is not your amigo, and your ego can be a huge obstacle. Market, Forex teaches you humbleness. Really, investing teaches you humbleness. Market forces you to admit and recognize your mistakes, that you can learn from those mistakes. Never, never, never do those mistakes again. A market is brutal in penalizing those who think that they are infallible. Don't think like you can never lose because you're a PhD or a lawyer or a neurosurgeon or a rocket scientist. Because frankly speaking, market does not care about your diplomas, market does not care about your accomplishments as a human being. Market does not totally care about this. And of course, it does not care about your ego. Guys, the longer you stay on them, the worse you get. And for the reason I explained you, because you're not on a demo account, you're not learning how to trade on a real market. I'm not saying that you should go on a real account with all your money. No, that would be suicide and that would be just plain stupid, okay? What I'm saying is to open a real account and just test it. You will see yourself that trading on $5 real is different than on demo $1 million. Just try it yourself. You don't have to put all your savings on a real account. It does not make sense. But $5, $10, $20, this amount of money that you can spend. I don't want to say lose, but to spend for learning, for a lesson, okay? It will allow you to know your mind better. It will allow you to know your trader psychology. And you need to find out on low stakes before you will move higher. Okay, about the money management and risk management, there are two most important issues: risk management and diversification. Okay, in reality, it is super easy, but in practice, nobody wants to do it properly. The lower capital you have, the higher risk you take. This is stupid, but it's true, unfortunately. It should be the otherwise. If you don't have a lot of money, you have to take low risk because you don't have a lot of money. If you have a lot of money, you can take more risk because you have a lot of money. Of course, it's other way around with traders, because if they don't have a lot of money, they want to take a lot of risk because they want to double up again. Okay. About the diversification, and let me just about diversification, I would just like to tell you one thing. I have a portfolio now on the stock exchange, right? We all know what is going on the stock exchange. Amazing gains. It's not on my Forex platform. It's in my local stock exchange, Warsaw Stock Exchange in Poland. I have 13 companies in my portfolio. So this is part of the diversification. So I'm not buying just one index or one company and put all eggs in one basket. That's what they call it. I have many eggs in many baskets, and those companies are from different sectors. Okay, so I have privately owned companies, I have government companies, I have growth companies, I have value companies, I have IT companies, I have advanced technologies companies, and I have producers of heavy equipment, so those old school companies. So this allowed me to create a diversified portfolio that behaves and it behaves well in most of the market conditions. Because imagine that I would have only COVID-friendly companies. Now they would not behave too good, because now we are leaving those COVID companies, and because of the vaccines, etc. So it's always good to have a proper diversification in terms of the different industries, size of the companies, and other stuff. About the risk control, money management rules. When you open a position, you should always have two plans. I told you before that traders had a mistake, that they had no B plan. Okay, A plan. Everybody has A plan. Okay, I'm entering here and I'm making $1,000. Everybody has a plan. But B plan? Who opens a trade and thinks, okay, maybe I will lose on this trade. Not many beginners, I think. All professionals do this because they need a B plan. So they open a position and they think, okay, how it can go wrong and what I will do if this position will go wrong. Well, where should I close this position? Because my initial thinking makes no sense. And this is the B plan. This is the place where you close your position and you leave your original thinking about the direction. You need to know when to exit the position before you open it. It's not like you will open a position and then, okay, I'm gonna leave it like it is, as it is, and I will think about where to close it once I will be on loss. That will be too late, because then when you will be on loss, your mind will start to play tricks on you, and your mind will tell you, okay, now you don't close this position. The market will reverse. Oh, don't close it now. Wait, $200 more because market can reverse there. Oh, look, there's a nice support. Don't close. The price can bounce. Okay, this can happen, and I'm I'm really honest with you, and believe me that it happens. So you need to have a stop loss order place where you put a stop loss order before you open a position. And when you opening a position, in the same time you open a stop loss order. Okay. Very important thing is that you cannot risk more on one trade than 2% of your capital. Period. For you, it's maybe not enough. Maybe you risk 10% or 20% or 50% on one trade. And if you do, I have to say it's ridiculous. And you shouldn't do this because it's a suicide. If normal arguments, you don't like them, you don't think that they are appealing. So let me just tell you this, that if you risk 10% on one trade, you have 10 occasions to trade. Imagine 10 losses in a row and you're gone. Simple as this. If you risk 2%, then you have more occasions to trade. Okay, to learn, to gain experience. And guys, believe me, 10%, 10 trades in a row, 10 losing trades in a row is something that will happen to each one of you at some point of your trading career. Maybe not now, maybe not next month, maybe not next year, but if you'll be trading for a long time, it will happen. It's just how it is. It's just how it is with this kind of demanding activity. Okay, you have to understand that trade that looks like a sure bet for us looks like that only for us. Market does not care if this trade looks like a sure bet. So you never can bet 20% on something because it's random. It is random. In trading, there is a random distribution of winning and losing trades, no matter what your trading edge is. You never can be sure if the next trade will be a winner or a loss. Your trading edge means that, for example, you have an edge over the market, so over 100 trades you have 60 wins and 40 losses. And combined you are making money because, let's say, average win is the same as average loss. So it means that you're making money because you have more losses than wins. But even after 10 losses, you cannot be sure that 11 trade will be a win. You cannot possibly say this because in trading there is a random distribution of winning and losing trades. In the long term, yes, you can succeed like this. Money management, guys. You must be disciplined, rules must be strict, and you should always obey them. Period. Sometimes you're going to think about breaking those rules just one time, don't do this. I know you'll do this anyway. And the fact that I'm saying that you should not do this does not mean anything. But you will do this, and then you will say, oh yes, he said not to do this, I did this, and I lost money. I guess it's like with children when you tell them not to touch this hot pot or hot frying pan, and the kid needs to touch it anyway to find out. Maybe it's like this. Guys, remember that weak mind can destroy the best system and the best money management program. So we can have the top-notch risk control, money management program, and holy grail trading system, and weak mind will destroy it. Let's talk about rules, because I advise you to have some rules. How can rules list looks like? Because, as we said, you must be disciplined, your rules must be strict, and you should always obey them. So let's see those rules. Trend is your friend. Open only positions with the trend. And guys, I don't tell you that you should follow those rules exactly. I follow them for some time. Now I follow some of them still, but just an example. But with sticking with those, you will do no wrong, okay? So trend is your friend. I only trade with the friend and with the trend, and it's K. It's where the traders earn money when they trade with the trend. Use the corrections to open positions with better prices. So the price is rising, then there is a correction, you buy, and the price continues to rise. Use candlestick formations, but use them only on important support resistance levels. Do not exceed more than 2% loss on capital per one trade. Some people even say 1%. But if I would write 1% here, you would say like, what? What is this guy talking about? 1%? Are you crazy? 2% is, let's say, maximum, absolute maximum. After 3 losses, double down the position. Okay, that's contrary to the popular action what traders are doing. When they are losing, they open bigger positions because they want to cover the loss. But if you have 3 losses in a row, it means that you're not feeling the market right now, or your system is not behaving, is not working good in current market conditions. So it means that you should double down the position. And once you will be back on track, you can start trading bigger. Once the position is on the green side, risk to reward ratio 1, you should change the stop loss to break even. That's what I do. That's how I remove the risk from trading, and it's a great money management and risk management tip. Okay, so what's happening is that, let me change the color here. Okay, on black, you have a chart, and then I buy here. The price goes up. My stop loss is here. This is the buy place, and the stop loss is, let's say, 50 pips. When the price moves to 50 pips profit, which is here, then I move my stop loss, I pull my stop loss higher above the entry point to make it break even. So I move this stop loss above the entry point. So when the price would come back, it would close my position with a small profit just to cover like the commission and swap and spread and swap. And in this case, when I see significant profit on my position, I remove the risk completely. moving your stop loss order above the entry point removes the risk. Of course, at some point in extraordinary circumstances, you may still experience a loss, but it's totally not common. Yeah, but you remove the risk from this trade by moving your stop loss to break-even point. As for the rules, use only higher time frames, open 4 positions a week maximum, let's say like this, quality over quantity. Remember, there is a lot of trading opportunities on the market, but there is limited number of excellent, spot on, the best quality trades. And I think you would like to trade only those top quality, not trade like whatever. Okay. And for example, I ran my results through a program which showed me that, actually through website, which showed me that, for example, my statistics are the worst on Friday. Okay, that on Friday I make terrible trades. There were 2 possible solutions for this. Find out why and adjust my trading strategy to the typical movements on Friday, or not to trade Fridays. Of course, I picked the second option because it was more appealing for me, not to trade on Fridays. I hope you agree with me. Few words about overtrading, my friends, which is our biggest enemy. At least can be your biggest enemy. So sometimes you feel like you just need to trade. Maybe you don't have enough confidence in this movement, but you really need to trade, and you put aside your system and you trade anyway. Okay, fair enough if you do that in the casino, but on the forex market is a huge mistake. Okay, so you would prefer to be a disciplined trader and stick to your discipline, money management, risk management, risk control. Okay, so don't trade just for the thrill, just for the emotions, just to feel how is it to be a trader. No, trade only when your system is telling you that you should open a position. So I'm gonna show you a few live examples how you should approach for to trading. So there is a fridge pattern, guys. Imagine that you're sitting at home and watching Netflix, and you suddenly feel snacky, you want to eat something, you are hungry. And then you go to the kitchen, you open a fridge, and then you see eggs, bananas, this and that, salmon, bread, etc. And you're like, I'm not that hungry. Okay, you come back. You come back to the sofa. You watch another episode, and then okay, I'm even more hungry. I have to eat something. You go to the fridge, like, no, this one, nah, nah. You're too lazy to make something, or you don't have this taste. So you close the fridge, okay. Then you watch again, and then you go to the fridge because you're more hungry, and then like, okay, I will eat those bananas, and you eat those bananas. How is it applicable to trading, you may ask? Okay, fair enough, I will tell you. So you come back from work, you open a platform, and then you have your system, you have your trading strategy, and your system is not giving any signs for trading. You don't have entry points. But then you close the platform, you do something at home, but I will open the platform again. You open the platform again, I have to look for something. And you look for something, and it's not a real trading setup, but you really want to trade, so you open this trade anyway. It's very similar to this fridge pattern. So in the first case, you should just not eat, just leave it, because you eat from the boredom out of the boredom. And the same is with trading. You just trade out of the boredom and to feel this thrill, emotion, etc. There's a guy called Niall Fuller, a great forex educator, trader from Australia, and he's giving two great examples of a successful trader. He says that trader has to be like a sniper or a crocodile. First, let me show you this. So, do you want to be a sniper or a Rambo? It's a stupid question because, of course, everybody wants to be a Rambo, right? But no, in trading, you should be a sniper. Uh, Rambo is opening many trades every day, shooting those trades like opening those trades. Sometimes he's usually missing. Of course, Rambo is never missing. But if you're shooting like this, you're wasting a lot of bullets. You will kill few bad guys, but most of the bullets you will miss. But on the other hand, sniper usually has one shot, one opportunity, and with this one shot he has to kill, because when he's shooting he's compromised. And you want to be a trading sniper. That's actually the title of our videos, because you want to open a position and you want to kill with this position. You want to kill with this trade. You want to open this trade and make a killing trade. So that's why trading sniper. Or a crocodile. Imagine this. Crocodile. He's with us ages. What is the crocodile doing all day actually? Swimming, doing nothing, relaxing, chilling. He's chilling basically all day. He is attacking only when he knows that he has a great chance of a success. You never see a crocodile chasing a victim, like running around, wasting energy. No, crocodile is preparing an attack for a long time, preparing this trade. Yes, by attacking a victim, I mean trading. So he's preparing this trade for a long time, waiting for this trade, seeing those setups. Finally, when he sees the setup, this prey, this victim, he's attacking. And most of the time, he's successful because he's not wasting time for bullshit. That's how you should be as a trader. Not wasting your time for bullshit, just doing maximum practical effort. How to avoid losses, my friends? That question arises. But it's a bad question. The real question should be how to deal with losses, as you should not try to avoid them. Again, you will never escape from losses. You should learn how to deal with them and how not to make them huge. Losses are part of a plan. They are just costs of running your own private hedge fund, because if you're a retail trader, you have your own private hedge fund. Losses are part of bigger winnings. So do not limit the number of losses, but focus on the amounts. Make the average winning higher than the average loss. This is very important. Once your average win will be bigger than the average loss, you will not have to worry about losses, because you will have always profit. People do not like to lose because of two reasons. Well, first, they lose money. Sometimes it's too much. But also they are proven wrong. And we, as humans, we do not like that. Humans can argue for hours, and even when they have no arguments, they will not admit a defeat. That's a human nature. Normally, you should not be mad at the fact that you need to buy a paper to a printer in your company, or you have to tank your car, your company car, or you have to buy a pack of pencils. Those are normal expenses in your company, okay? You just have to make them. It's the same with losses when you have your own private hedge fund. Losses and winnings, they come together. Loss is a result of the fact that you have opened yourself for a new opportunity to win, but this time you picked the wrong side. Okay, it happens. Guys, let's be honest. Market is always right. You have no grounds to think that you can be smarter than the market. So don't act like it. Stop acting like you can be smarter than the market. If you think that you cannot be wrong on such a huge market, then, well, you are simply wrong. Make those losses small and not lethal. One loss cannot hurt you, one loss cannot disturb your plan or distort your trading approach. Otherwise, your system is done and so are you. Okay? One more time, just to make this clear, guys, because it's very, very important. You can have the best system in the world, but won't be able to use it properly, as your mind will not allow you to do so. Next trade is a win or a loss, you never know, you never can be sure. But in the long term, when you have edge over the market, you will succeed. Do not overtrade, guys. You never know, you never can be sure. I'm sorry, do not overtrade, stick to your system. It's not a shame to be without a position for a week. Be like sniper or a crocodile. Go only for sure bets, but keep in mind that those sure bets can fail too, and they will sometimes. Do not risk too much. Risk only the money that you can afford to lose. And all this, if you make all this, it will make you emotionally free to the potential loss. Right? Simple as that. Let me show you. If you already don't know about this, we have our Twitters, my personal Twitter and Auxiliary Intelligence Twitter, where I post my trades, my trading ideas. So if you're struggling yourself with trading, I advise you to take a look on my Twitter because you may find some interesting trading occasions there. Let me copy the link to the chat. You will be able to follow me and check the latest ideas from our team. Also, we have 50% bonus. So I saw that many of you are trading on a demo account. Fair enough. But as you know from today's webinar, it would be nice to test your trading mind, trading psychology on a real account. And it's a good way to do this with 50% bonus that we offer to open a real account. I think it's a nice bonus for the end of the year for Christmas. And guys, if you have any questions, problems, ideas, please write on support@auxiliary.com. There's a bunch of guys that will be more than happy to help you with all your questions. And remember, we don't give any investment advices. Any questions, my friends? Do you have any questions? Do you have any questions? Okay, I can see. Strategies class. Let me show you. Let me show you the webinar calendar. It's here. We have the next webinar on Tuesday, 15th of December, and I will show you how to create a trading strategy. Actually, I will share my strategy, but it's really easy. I'm sure you will enjoy it. Okay, my friends, great, excellent, no more questions. I hope you enjoyed this webinar, and definitely I hope to see you on Tuesday, on 15th of December, because I will show you my strategy, which is really simple. I will help you to come up with your own strategy. and we'll have fun trading real markets. Guys, all the best. Thank you and have a good weekend. All the best.